Welcome back. I'm going to be kind of going through a live kind of analysis session, I guess. Kind of looking into the charts and kind of getting a feel for what I'm kind of thinking for. Again, this is all speculation. Do not consider any of this financial advice. I am not a broker. I am not any Series 6, 7 certified. I am just completely a market speculator. And, I kind of just have a passion for the charts. Any results posted on the channel are going to be demo, just to kind of remove all liability for myself. And just so I am not responsible for double losses between anyone else that is hanging the stock market on my word and, taking and assuming risk on my word. So let's get into it. I currently been using ICT's concepts for about 2 years now, and it's been definitely a journey for sure as a trader, and kind of been under that mentorship here. Kind of my goal with the channel is to basically kind of put my journey out there and just ultimately share my experience and share what I've learned. And if ICT does kind of teach in a way that may not, grasp to everyone, and so maybe if I can, help supplement, and, you may be struggling from going from system to system, or you've been trying to piece it together and, it's not really kind of clicking, maybe if how I'm kind of frameworking what I'm doing may help you kind of find your footing, find your model, and kind of really kind of put it into perspective for you. Again, this is how I view price action. Again, price action is always going to be subjective. It's subjective to the eye. It's different between trader. It can be an ICT trader, but he may see something completely different. You may not see price, or his approach to price using those concepts may not be the same as mine. I don't take everything that ICT has taught. Initially, I did try to soak up everything, but then it came to the point where I kind of had to find my own rhythm in searching through the charts and kind of finding, the moves, or, what price is likely to do, and really refining that anticipatory skill set. So kind of going back into this, we had Tuesday open. We had Monday, obviously markets were gyrating around, but it was obviously a no trade day there as well. And for me personally, the first trading day of the week is complete speculation. I'm not involved, or I have no want to press a button. I have no desire to do so. And I just kind of came from experience, and just how I personally do well. I don't do well trading Mondays. I think Mondays is a lot of indecision. And once I kind of go into weekly profiles, and I was kind of looking at my wins and losses, and I kind of noticed that, it wasn't really beneficial for me to trade on Mondays. And I feel the same way about Fridays, but I don't completely write those days off, or I should say the first trading day of the week. I don't write those days off completely, because I still use them to study price, and there's still something to be gained there. It's not kind of just a day where I slouch off and I take time away from the charts, which, sometimes I may do so, but I will at least go back and kind of journal some things and kind of review what I saw, or what I noticed, or how is this incorporating to the weekly picture and the weekly focus for price action for me. All right. So kind of back to where I was thinking here. So for my personal model and how I like to use it is, I like to use the opening range low. And I do this with intraday stuff as well also, but the week, and this kind of goes to like a weekly profile, I'm more focused on determining the weekly draw on liquidity and the kind of like the daily framed based on that. And kind of like the days I do trade, which are, maybe, for this week, since it's a short week, Wednesday and Thursday, again, depending on other factors such as, the news and anything like that. But if it's traditionally a Monday through Friday week, I'm looking really for a setup. Even if I'm just tape reading, I'm still hunting that same kind of setup and training my eyes and doing so with using that opening range. And I apply that same thing to the week there. Just according to ICT, the opening range, low or high, for this week, I do foresee lower prices based on my analysis. Again, not financial advice, just something I have an idea for. I'm speculating. So for a bearish week, you do want to see this very quick low kind of put in, which it can be taking liquidity, right? These lower lows, these relatively equal lows right here. And then we did have this very nice daily fair value gap here. Let me just bring you to the daily chart just so I can kind of show you. Holy shit, that's big. Okay. So this right here, this daily fair value gap right here, right? We have this 3 candle pattern, quote unquote, if, for more retail or familiar with using the term pattern here. I don't really use the term pattern, but you have this candle, and then there's this subsequent gap here. It's annotated with this rectangle right here, and then this candle. So there's this gap right here, right, where price wasn't necessarily offered at fair value. So with that, right, that was kind of my idea with kind of where the opening range low kind of would drop down into. So going back to our hourly chart, that's kind of where we had last night's trading going down into. We did have a breaker right here. We had the high to low to the higher high, and then it just nicely dropped down. And then you can kind of project that. And then again, this is not actionable setup, but it is occurrences in price using ICT's concepts to help you kind of anticipate where you think price may go to. And I did leave I had a question mark here on my Telegram. I did want this low kind of taken out, which it did help reinforce what I was thinking. So beautifully, we came down here to 4 standard deviations, and then you can kind of end the move here. We took liquidity. We had these equal lows. We dropped into a higher time frame liquidity fair value by the means of a fair value gap to the sell side. And then with the opening range, you want to see that aggressively traded away from. So even on this is the hour here, right? It had a little time to kind of reaccumulate, and then we just nicely moved away. Very clean. Despite this wick here, nice highs, nice all the way through. Very clean. So that is a good sign. So going into this here, and maybe these concepts are going to be very foreign, but we do have this 15-minute buy side imbalance and sell side inefficiency, and I am going to go more into the channel, and as we build the channel, I do want to kind of go more into the specifics of these, and obviously crediting ICT. By any means, I'm not trying to repackage anything. I'm just trying to simply share my journey of, discovering profitability using these concepts, and maybe, just kind of helping where I can. And, I know it's very lonesome out there, and you're kind of really taking on this task alone as a trader, and it's a lonely road. So, I do feel for the person that's at home right now, and they're working, or they're 9 to 5, or, for me, I work a 6 to 3, and, they spend their time, studying this, and, really kind of spinning their wheels a little bit, and, the effort does not go unnoticed. So if I can help in any means, that's absolutely what I'm striving for. So this is going to be a bearish, in this scenario, this will be a more bearish buy side imbalance, sell side inefficiency. Kind of where I'm going here. And again, this gap right here, once you drop down to the 15, it'll be a little clearer. But we can have like a 3 drives pattern into a bearish point of interest, where we can see this liquidity being taken and it's offering, and this will kind of gets, some breakout traders in trouble here, is that, they're seeing it, oh, it's a higher high, but where they are in price is not necessarily we're going to go mooning to the upside here. We could always go into, and take this previous week high, which would be, phenomenal. It really would, because that would definitely, there's tons of liquidity above here as well. So there's a lot of people who are short right here so far, and they're kind of in their positions, institutionally wise, not necessarily saying about me and you as combined retail traders here, because we don't have enough capital to even remotely move the markets. And what moves the markets is not even money. It is money, but the algorithm that we subscribe to. So taking this previous day high is still, granted, a great form of liquidity that we can take here, plus being into or trading back into a bearish point of resistance, our point of interest here, this buy side imbalance, sell side inefficiency. And then again, this could be a order block here, right? We have this last up close candle before the down move. So I can justifiably be an order block, and using the body of the candle to measure it out, we could see, trade up into this 50% range. It may stab above it and kind of just close into this imbalance here. It may not precisely go right here on this imbalance right here, this 50% mark. It could, but being NQ, being a little more squirrely, more manipulative, it could kind of stab through it and just really strive to close in this whole range right here. And with the news, I think that could be possible. It may not offer anything in the AM session. We may see like the AM rally, PM reversal. Let's see here. But yeah, trading up into here, and then I think down here is going to be kind of where I want to keep my focus. Since that low, I do want that revisited, and I do want it traded through. I am going to kind of label that as sell side. And we do have some sell side targets down here below. We got some sell side liquidity here, nice lows. We have a fair value gap here. We got another hourly fair value gap. So tons of liquidity to the downside here, and also, and I will do some comparison with the dollar, and that can kind of help us confirm our bias, and also kind of see where we kind of are and kind of confirm. Again, if we don't see anything in the dollar, then we could kind of maybe be not so sure in what we're going for. Maybe want to sit on our hands for this session, and that's kind of the skill set of learning, is knowing when not to. But yeah, so we have a trade up in here, and then I think we can ultimately revisit here in the week. It is September. Markets move very nicely in September, so we can definitely see a nice, very speedful run trading down into this range here. I'm not so worried about this fair value gap here on the hour. I don't really see it causing much trouble for us here, but I'm just leaving it there just to kind of see how price reacts to it. We may see some redistribution here, and then can kind of keep going lower and down onto ultimately right here, and hopefully we'll get down here to the 15,354 level. So let's take a look. Let's go to the daily on NQ really quick, and then we'll kind of take a look at the dollar and see what we find here. So on the higher time frame, we do have the daily on the daily chart here. We have some imbalances here. Mind you, this red area is our daily fair value gap that we have on our intraday chart. So we did take this buy side liquidity from August 4th, which is huge. That was with Friday's price action. And then we had both ranges taken out. So it could be fair with that higher time frame chart, or the higher time frame level in that buy side liquidity being taken, that we can move down into the sell side here. Again, this daily level, or this February gap right here, is very much so a point of interest here, where with it being in Q and the markets being in September, where markets move nice, we can see some trade down here. I'm not really going for the gusto this week. I just kind of really want to see this profile kind of take place here, where we kind of just get a nice little move downside, coming from up here. Let's just measure that out for sakes. So just say if it price trade up here, maybe cam down here, that's a nice little, almost 1.25% on the week. So that's definitely a lot of price that you can probably catch, and you don't need to catch this whole move. You don't need this whole 1%. Like you don't need to get 268 handles on NQ to make money, or to be successful, or you don't even need this even if you're just watching price. Like you don't need all this. You just need whatever your setup is during whatever time, and you just need to get a piece of this. Can't go for the gusto. Don't let your ego get involved. You just need a piece. You just need, out of these 268 handles, you just need 20 handles. That's it. So you just need to take 20 out of 268. Pretty reasonable with ICT's concepts. And that is more than plenty for the week. Even if you got 20 on Wednesday and then you took home, you took a 10 handle loss on Thursday, but you net 10 handles, that's still good. You don't need this whole number. Don't be obsessed with this. The goal is basically working the anticipatory skill set and finding your model and seeing it in price. And then once we get to a point, even myself, developing as a student, where we can, have a swing, maybe leave a contract to run down this, let it run. But for the most part, that's not my goal at all. Kind of still in my development as a trader here. But back to the higher time frame. So kind of definitely want to get below this. I said 15,354. This is 15,348. So just a little bit above this. We tap into that. That's pretty good. If we get all this down here, that's definitely some good eating also, where the days may offer something really nice. But it is a short week, so I'm not even really trying to even sit here and say that it's one of them kind of weeks where we're eating. There's a lot to take home, but it may not. But we'll see. But we're not going to be greedy. We're going to be reasonable and have reasonable expectations. So going to the dollar here. Conversely, if you are looking for lower prices in the indices, and I guess you could say the S&P 500 and NQ as a whole, you want to see the dollar move higher, but have a clear sense of direction here. This is today's price action. I mapped out on the Telegram what I was expecting, and as we traded up here, and this is ultimately a weekly breaker here. So getting above this is really nice, and we saw this daily breaker right here. So that's good signs that we can really kind of stretch our legs here and see something in the dollar index. We do have this in volume imbalance right here, that we can kind of notate here and just kind of see where it does with it. But I definitely think this could be something here. We'll see tomorrow. I mean, we did have a big range day today on dollar. So if we had maybe a smaller range here, then maybe Thursday we can kind of see it stride up. Ultimately, we won't know until it happens. But I definitely do anticipate we are moving kind of upwards in price on the dollar here, which kind of pairs with our bias on NQ, or kind of just what I'm thinking. Let's see here. Kind of just hanging out with me while I kind of just look at the charts, kind of get a view. I do think this high will be kind of left alone. I think this will be at least an intermediate term high that we can see that's respected here. We can kind of see the swing high being formed. So we have this, swing high is going to be 3 candles here. So on NQ, this is that high right here that I was talking about. So we have that low, that lower high, higher high, then that lower high, kind of rounding out. And then where you can kind of see that reversal, smart money reversal kind of take place. So kind of trading up into here and kind of moving lower is what we can see, and we can maybe see a market maker sell model kind of kick in here, and we may have this kind of trade up, and then we kind of trade on down here, and we kind of close in this liquidity. And I think that's a fair assessment here. It's really kind of picking a side really comes down to, is there really indisputable evidence? Kind of framing, what you see. Is it kind of really easy to kind of frame this all out? I mean, initially, yes, understanding the concepts and kind of putting it all together is going to be challenging. But once you kind of get what you're looking for in price action and what you want to see and what are kind of some of the signs that your eyes kind of cater to, again, over the week for me, I'm not really so caught up on I'm not a 1 minute guy. The lowest time frame I go on is the 15 minute, or sorry, not the 15, but the 5 minute. I stay on the 5 minute. I find entries just fine. You don't have to be on the 1 minute. There's a ton of noise there. I'm just not at that point in my trading, and I don't really care to be on the 1 minute. It's not pertinent. You kind of lose these ideas and these kind of group thoughts as you're kind of developing as a trader, where you kind of begin to think for yourself and what works best for you and how you structure yourself and how you carry yourself as a business, as a trader. But let's see here. I kind of want to leave some annotations. I do like this low right here. And even again, let's just take a look on the lower time frame here from today and kind of see what we had here. So I did make this annotation earlier in the day while I was at work. So we traded down below these lows here. I had this question mark right there. We traded below that and then into this higher time frame imbalance where we did see another and price kind of respected this. And then this is the 15 minute here. A very good roadmap, a bellwether, as ICT says, for your intraday charts. No real need to, for me, I think if I'm keeping my eye on price action, I'm on the 15. I'm not so worried about every swinging candle on the one. Maybe on the 5 minute if I'm hunting, like I'm going to actually push a button. But if I'm strictly watching price, I'm going to be on the 15 minute. So on the 15, this is early morning. Obviously, I wasn't even awake. I'm a Pacific Standard Time guy. But I did mark this level here because I did want to see price at least respect this and then kind of trade away from this low down here. So which it did perfectly. Touched it. What did the damage? Closing this imbalance right here. Again, that 3 candle pattern, right? We have this candle, this candle, this candle. There's this gap, right? Stabs right into it nicely. Kind of gathers itself, keeps accumulating, and then nicely moves away very cleanly. And these are all 15-minute candles. So this is very nice, straight up kind of movement, trading away from this opening range low, which is good. This is what? 15, 30, 45, that's an hour, 15 minutes. That's a nice move. So if that is, again, your model, right? If you did want to take a piece of the pie today, that is completely up to you. again, I'm just kind of showing that you don't have to be on the 1 minute to see a move or see price action. This happens on the 15, the hourly, the 4 hour, the daily, weekly, monthly. These things, if you study them, you can see them at any point in price because it's all fractal. So, kind of going into the overnight session, we did have this breaker kind of form. So we had this low right here, and this is a buy side, or I'm sorry, bullish breaker. So this low, this high, and this lower low right here. Again, we respected this down close candle before this move up here. A lot of wicks did the damage. That's why I don't like trading the first day of the week. Wicks do a lot of damage. All these wicks can get you stopped out. So if you are going to trade those days, assume a little more risk. But I would like to see this happen. Let's see here. I kind of want to just save it here, just so we can kind of monitor it. All right. So as I was kind of thinking, how I said I wanted this level, kind of have 3 drives into this, sweep this liquidity here. We do have a consequent encroachment of this giant wick right here, this daily candle. If we can see that, and we take this, and then there's another kind of bearish point of resistance on the 4 hour here, and of course taking this liquidity with this imbalance, and then kind of moving lower, that'd be dope. So that's pretty much it. All I have tonight. Really kind of just going through the mind and being able to kind of process and see where I kind of build my model and kind of what I'm hunting for. I kind of like to do these things. If I see breakers, I like to leave the projections up and kind of see how close we can get. And then you kind of be able to see it for yourself. You know what I mean? But yeah, let's see. Let's take a look on. Let's go back to the hour. Yeah, I mean, that'd be nice. That'd be nice. That'll definitely be nice. Definitely be nice. Take this up, 3 drives, 1, 2, 3. Take liquidity and balance, a consequent encroachment on a 4 hour wick there, back into a daily fair value gap, and then we can move lower. Yeah, that's good. That'll look nice for sure. But until next time, I'm gonna post all socials in the bio: Telegram, Discord, Twitter. I'm gonna be posting updates daily, kind of after hours, kind of throughout the day, maybe during the New York lunch, whenever I get some free time, and kind of update the charts. And if I'm wrong, I'm wrong. Again, this is not financial advice, so you shouldn't be hanging on to every word. But if we're right, that's kind of a little win for our anticipatory skill set. Not a win for as in wins and losses, I was right, but in refining our skill set and understanding what price can do, or what I'm expecting it to do based on my model and what I'm seeing. That's a dub. That's definitely a dub. But until next time, good luck and good trading. We'll see you out there.